Yep, you're with the Market Sniper. How are you guys doing? It is halfway in between Christmas and New Year, and we're going to give you an update on Tesla, and ARK. It's an ARK. Let's have a little look at what's been going down, because this has got really interesting. There was, of course, a little reminder of a man that called David Hunter, who said somewhere around here during this period, beginning of 2022, that at some point we would get, due to stimulus, an incredible rally that would see within 4 months a 60% upside move. He did, however, miss what happened since March 2020 for Tesla. That was already coming off a low of around 1190, and at March 2020 at least, my apologies, was around $23. He did, however, miss this run up to approximately $400 from the $22 mark, as being a significant move of any sort that could have been reliant on the whole watermelon communism battery car narrative that of course can be disabled remotely, as we've already seen and reported when Audi bought a Tesla and took it out of its zone to inspect it and break it down. It was remotely disabled. That's right, your social score could see your car incur 48 hours of penalties for non-use due to a hate speech post on Twitter, like mocking ARK or Tesla, for example. That's a microaggression. Please hit the like button if you are pro-supportive toxic masculinity and microaggressions against the control structure. Yeah, that would be us fighting the war. Anyway, so this head and shoulders, let's get to the point of the technical charts and quit the bluster. Big move up. Big move up from 1190, clearly driven and very well juiced by the events of March 2020. And I want to highlight the head and shoulders. Many people said, "Your head and shoulders on head and shoulders." Learn how to do complex head and shoulders. Go to themarketsniper.com. Become a better trader this year, courtesy of HVF method. That's right. Called single digit oil, called gold long the same time, called 3 successive crashes in the euro Swiss franc, called the dollar to be super dominant and the euro to fall from 118 to sub 1 in parity, below parity. Yes, all of that did happen. Also called for Solana to trade $3 when it's at $48, currently now in single digits. Called for Hex to trade sub 1 cent when it was at 37.5 cents on a head and shoulder that we called 51 cents the top. Called Bitcoin both long on the first cup gold nugget through to the upside, and said it'll be a rare occasion where leverage longs held for a medium to long term will yield great results, and then went bearish Bitcoin from around the $55. Lots of good strong macro calls going on right here, my friends. On the currency markets, the USD JPY to the moon until it made its target. It ran 150 and then it was breaks on all the way back down, down to 130s after coming all the way from 107. That's right, the great yen collapse, also called with the dollar dominance, which also put the frighteners on the crypto market that saw us bias bearish during that period, seeing good money made on the short side when it wasn't being stolen by exchanges going bust. So here we go. That was the first call of the head and shoulders right there after that rally, as it was rolling over out of a broadening structure. We had our right shoulder now in. We expected a strong sell-off. It gave it that. That was the interaction with the neckline, a small bounce, another minor broadening structure in there. Let's have a closer look at all of that good stuff. Let's go to the daily, in fact. Then you spilt from the head and shoulders, and we did a reiterate on the head and shoulder call over here on the break out of a rising wedge. That's right. We have had puts on this for an extended period now, and it's been holding and getting better with every passing day. This is an absolute spiller with an earnings due to come. And good old Elon, he was playing too much with his joystick in his automated car and his twatter. He forgot to look after the knitting, the good old battery iPhone car. And what's happening is going to not do too well, I suspect. So here's what I think will happen. It'll gap down through our target, probably before. It'll trade down it'll gap, my apologies, on the earnings announcement to the downside, and thereafter have a bit of a rally once the bad news is baked in. So earnings will be a good day to actually close some of those puts on an expected bounce. But further downside after those rallies will likely occur. This is the beginning of a sell-off of a greatly overvalued company, in our opinion. And by the way, this is the first time we've gone short. We've actually traded Tesla long once or twice, despite not understanding its hyper overvaluation. First time we've gone short. Don't forget, we were the first time ever calling the bond market turn in 2020, August of 2020. Not before. It was our first call. We told you about it on the YouTube channel. Our premium guys got to hear it well before we started discussing it there. And since then, you've seen debt suddenly go bidless in Britain, bidless in Japan. That's right. It's a turning of a cycle, my friends. And hyperstagflation is here. You will never get inflation low like it was before. Even when you do your demand destroying event, which I'm pretty sure they have planned coming for you. You're going to have an equity correction. You might have repo markets. You might have derivative markets. You may have banking crisis. You may have liquidity problems. You may have a debt-based crisis. You will see, we will see. They're going to keep tightening to stay out in front, to keep the dollar at the floor because it's under attack, and something will break. During that time, the equity markets could and would and should fall further. The valuations are exceedingly high. Apple is no longer a high growth company. For the amount that it grows, it should probably in legacy times be on a 10 times multiple, but it's currently a 20 times multiple. There's lots and lots of room for a lot of equities to see a lot more downside. The financialization of everything saw a hyperinflation in valuations before the inflation in the CPI. That was Greenspan's great crime, running extra normal low rates during a period of globalization that saw supply chain prices go down at the footband level. He let money expansion go up, and kept the cost of capital really low. What did you get? You got a hyper-leveraged society with excessively overvalued equities and property booms as well thrown in, and many other asset prices. So there's been inflation in assets, and this is what we're seeing, a bit of an unwind thereof. We have good company. Apparently Michael Burry is also short Tesla. I'm not sure if he's short ARK as well. So this is still to make head and shoulder target. After that, maybe a small rally. Then I expect a gap down on the earnings news, and then a larger rally potentially for a while. So I'd probably look at closing on the earnings news. When's that? 24th of Jan. Not too far away. Not too far away. That month will go quick, I can assure you. Anyway, so let's talk about ARK. Kathy, I don't think, has done the best moves in terms of her positioning, and went double down on risk just as interest rates were tightening. Has now become a big commentator on the macroeconomics, encouraging the Fed to stop tightening rates. No, Kathy, they're going to keep tightening till they break something. They don't work for you, I'm afraid. No. You made a mistake. You should have got into more cash. You should have got into more stable growth. You should have stayed away from the metaverse and all that is speculative fluff. Remember, most of the fluff dies. The big control structure companies are the ones that survived the .com. Amazon, Google, Cisco, all the chip and the tech and the people that are surveillance financing you into the ground. They survive. Pet.com, Bridal.com, Boo.com. They didn't survive. All the schmucks with their little MBAs and their business plans, they didn't survive. They all died. The same's going to happen in crypto. They're all going to die except for the control structure ones like Ethereum, where they'll have your house registered on the blockchain. Isn't that nice? Isn't that convenient for you? Oh, now you pay tax on it according to its value. Whoops, you understated our value. We just printed up some tokens and bought it at that their price that you offered it at. Oh, that's a Chicago discussion paper courtesy of Vitalik. That's your communists throwing you off. By the way, as I ranted on crypto, I will rant here too. So is it. They are looking, my friends. It is not just a concept. This, you will own nothing and be happy. They want to own all your stuff. They want to flush you out of it. A demand destroying event, pumpermentals and interest rates, all of these things will very much help those causes. A Russian hack of your bank accounts, zeroizing all banks. in the Western Hemisphere. These will be very useful things to introduce UBI along with the CBDC. Let's seize this opportunity. This crisis always offers an opportunity, and we will introduce this. Yes, indeed. You should be in cash. You should be prepping. And you should watch equities like this go to single digits, in our opinion, 9.99 and below. And we've been of that view for an extended period, even on this rally where it traded as high as 53. It was a rising wedge. You spilled back down. You revisited the neckline. You broadened. And now you've let go. You have let go, my friends. You have let go. Round tripper, round tripper. There are round trippers everywhere. Over here in 2016, this low will be run, in our view. That's right. A 2016, which is now getting for almost 7 years away, a 2016 price that was 7 years old will be run to the downside. Such will be the macroeconomic conditions and the downdraft for this area of work, in our opinion. Is that too far? Are we going to be wrong? Hey, we're bound to be wrong on a few. But we're not doing too badly. Keep on keeping on. It is a bear, my friend. It is a bear. Keep treating it as a bear until it stops biting like a bear. Then maybe you will find the horn, and then you can do whatever you like with your horn. You can do what Elon did and go and play with your twatter. Anyway, let's get on with the technical analysis. Is there more to be said apart from an extreme downset? Probably not. We've also said the SPY. Yep. Spy. The index. There she blows. So we've also been short on the S&P. Now you'll note that you've had ups and downs. We called a head and shoulder over here. Let's go to the 2-day chart on this one. And you are letting go again. After a return to the neckline on that head and shoulders, that target was run. That was done. At the same time, we were calling this head and shoulder to the downside. Hunter was most peak vocal, appearing on Wealthion and appearing on channels we would never even be looked at. He was rolled out as the bull candidate, calling the bull market. That's right. And he was saying it's about to go. Within 4 months, up 60%. That's what he said. Unfortunately, it's probably done the exact opposite. Down, and is losing momentum. That was a very dangerous call. That's why I keep going on about it. I just don't want people to get wrecked. It's a dangerous time out there. It is a dangerous time out there, he said. There is peak potential for mega bearish events. All the risks are to the downside, in our view. Something will drop. That will be devastating, and you'll get a narrative for this earnings destruction that is coming, and this re-rating of PE. And the 60-40 portfolio, according to Zero Hedge, will be back next year. No, it won't. Bonds are going to be garbage. They'll get a bit of a bid when they do the demand destroying event, yes, but they'll never get to the lows of the COVID lows, and then they will turn and go ever higher. Why? Because we've bifurcated the supply chain. Energies are going to remain stubbornly high, although they will dip on any demand destroying event. They will not go back to previous lows. That would be hard, actually, in terms of oil on the WTI contract to run lows, but they will remain stubbornly high. So we are now going to be in a hyper-stagflationary environment. So equities are going to underperform potentially for two decades, maybe 2.5. It depends how long you shake off this hangover. Bonds are going to underperform. In short, the 60-40 portfolio should be 60% arable land and industrial commodities, copper, tin, nickel, and various other things. 40% precious metals, such as rhodium, platinum, gold, and silver. Those are my picks. That is just the new 60-40, my friends. Growing agri, growing things, and supplying them. That's right, also fertilizer and also shipping, getting things moved around in this new Belt and Road, bifurcated, crazy new supply chain that has to be developed. Your delivery costs are going up, my friends. That business is going to do well, and it's going to cost more, and there's going to be shortages. So get on to that train. Meet the Francis Hunt 60-40 portfolio for the future. Arable land, industrial commodities, and precious metals, along with a bit of fertilizer and shipping. Good for you. And energy in time after the next dip. So that's how we go. That's my 60-40 portfolio. It sounds more like quite a few things in there. Maybe I need to work it out a little more. So this is a rising wedge and down coming through here. at the 376. So we expect further downside after this pushback. Don't forget, this got a bit of a tailwind during the dollar weakness period. During the dollar weakness period, dollar had quite a pullback after its sustained period of strength. That was super strong. That saw you go to 114 on the Dixie, but now settled back at around 104. So yeah, this got a tailwind because a lot of the depreciation has been taken on the currency level, and so you got rallies on this. But let's have a look at that NASDAQ. Well, not nearly as sweet or as nice on the rallies. You can see the rallies are smaller. Growth is not being appreciated in this higher interest rate environment. This is actually the only one of all of them yet to make its head and shoulders target, though, although I have no doubt that that moment will come very shortly for us. Look at that there, broadening structure. That's how it's going, that's how it's rolling. Is it broadening or is it a flag? I don't know, one or the other. It depends whether you're on regular or log, generally. So we're looking at this and we are seeing further downside. Let's move that line a little bit away. And that one is yet to perform to the downside, but coming, in our opinion. Along with ARK and Tesla's continued down sell-off. Those are our picks for the shorts. They remain them. But if you were to rush in now, just before the earnings reports, you might just get a small period of beneficial trade, and then you could face quite some pushback. Remember, things don't go down in straight lines, even when they have to re-rate substantially. Okay, I think that's it. We've covered the indices, we've covered ARK and Tesla. This is who we are. We're on themarketsniper.com. If you want to learn how to do complex head and shoulders, HVF method on broadening structures, grind lines, as well as the unique entrance of an HVF setup, which is the super tightening of extreme low volatility to a future expansion that no one else has been doing, not for any years, and everyone else is largely a copy or a fraud that is doing it today. A copycat, I call them, shriek, holler, and yell. Since the late 1980s and early 90s, since I've been developing my original thoughts on this, that leads to HVF method today, as it is available and taught. Go to themarketsniper.com. You can start making macro calls. It's a totally transferable skill. There's nothing special about me. It's the method. It's the method that works. And when you're wrong, you're early wrong and out with a small loss. That's how it goes. Okay, we have a couple of short-term trades that we are in on the community side. Outside of our crypto shorts, ARK and Tesla, which both of declaration, I have puts on those and have had for quite an extended period. And I've never trusted elongated muskiness since the Neuralink chip business, and I don't think you should too. And I wonder how far this rating will go. Will he be a fallen hero? Will he be the next SBF, or will he be recycled? I think they've invested too much in him to let him fall too far. But there will be humility all around in terms of equity valuations. I do sense a bitter season. Don't forget, Feds coming at you with interest rate hikes. Let's just check that rates before we sign off. And this is why the dollar might get helped a little bit. You've got the US 10-year, and it is getting firmer and stronger. Take the lines off. You can see bidding up. This is a driver. Don't forget, a rates call is required in February as well. So this will likely fix and bring the dollar back. That could also mean fear, because things are getting closer to breaking as interest rates hike. That'll, again, as I say, put a bid under the dollar. That tends to put pressure on the equities, very strongly valued equities, pressure on Bitcoin. It will also put downward pressure on the energies, which will have the effect of reducing the inflation in the States, which is in and around 7.1. The UK sitting on 10.7. They don't have a strengthening currency right now, although it bounced quite strongly from the weak point. They will have to match that which America does. The Eurozone will have to match. Lagarde, Agent Orange, came out all strong on inflation. Let's see how those Italian bonds hold up. Let's see how when she keeps tightening to the same degree. This is an arm wrestle, and the Fed is out front. and that's how they plan to play it. Okay, guys, till I talk to you next time, thanks for catching up. We appreciate you. Have a great new year. Enjoy it all. Spend some time with family. Get off the charts. Don't get too hung up on everything. Life is great. Inhale every second of it all before you're locked up in your little AirPod coffin flat a la Hong Kong in 2024 in a city called Neom or the Edge. Until then, build wealth, buy land. Your 60-40 portfolio, let's cover it one more time. Arable land, 60%, along with industrial commodities, tin, nickel, etc. Precious metals, 40%, which will include some investments in fertilizer as well as shipping, along with your gold, silver, gold, and rhodium. I said gold twice. That's a double gold. You know it's got to be good. Okay, till next time. I'll catch you then. Bye.